Hello, everybody. Welcome to episode 4 of The Officials. This is a very serious week. So I have here a few officials, some permanent, some borrowed, but we are here in a good, strong team because this week was very tough. Japan had a major collapse on Monday. The Nikkei just came down by 12%. Overnight, as we were observing the markets, it really looked like the end of the world. And I guess if you were Japanese, it was. And that extended to Korea. And when we were in the office, we were talking to our colleagues that handle the Asian markets. And they said, I cannot get through to them. They don't want to talk. All they want to say is, my book just collapsed. And they were not talking about their trading book. They were talking about their personal holdings because that was a big, big blow. So I'm going to pass it a little bit to Harinder here to talk about was the reason for that collapse the carry yen trade, or what is, in your opinion, what occurred?
Exactly, Jorge. So the carry trade, which is where you might go and borrow from a currency which has a lower interest rate to invest in a higher interest rate currency or elsewhere to get better returns. The thinking behind that was that since the Bank of Japan raised rates, historically the Bank of Japan has had negative rates or close to zero, and raising those rates has meant that the Japanese currency strengthened significantly. And as a result, asset managers and investors who've borrowed the yen at a low interest rate to do the carry trade to invest in money markets or stocks elsewhere have now basically seen margin calls, and they've seen issues where now they've had to pull out of their investments elsewhere globally in order to cover their yen positions. So yen has strengthened significantly.
But this was, in a way, reminiscent a little bit of the Asian contagion of 97. What are the responses that we are expecting from the West, which already there were some mutterings, but to you, Harry?
Well, I think there was obviously a lot of concern with the downturn in equity markets, and as usual, when you have such corrections, Jorge, people get extremely concerned, and they start looking towards the Fed. And very quickly, we saw the pricing in overnight interest rate swaps move towards expectations that the Fed would move quicker, in the sense that it would cut rates by 50 basis points as opposed to the consensual 25 basis points prior to the event. And that thinking essentially developed in the aftermath of that correction. Now, when we look at what the OIS are pricing currently, it's not as close to 50 as it was when the event happened, but nonetheless, we still have a probability of pricing in excess of 25 basis points. So the market is still feeling jittery and looking for reassurance. We haven't seen any other signaling, really, from government or policy bodies in relation to the correction. So right now, just expectationally looking for the Fed to come to the rescue. Whether we'll do that or not is a different matter.
So, quick poll here. Let's start with Will. Will there be a rate correction down by the Fed? No numbers, just a yes or no at the beginning of September.
Yes.
Yes, I think that's fairly
Yes.
agreed.
I am on the yes too. Now let's put you on the spot again. 25 or 50?
I think it will be 25.
I agree with Will. Easy as she goes.
I think also 25.
I am at 50. But with an 80% chance for that. Because I don't know if to say negative or positive on a rate cut, because the market was so unstable on that Monday. I mean, coming down by 10, 12% is very severe. Granted, the following day, the market recovered, but it was very close to a disaster, right? If that had persisted, how do you stop it? You have to have an emergency rate cut, and nobody wants to do that because that means really things are melting down. And this means really that there are so many snakes in the grass that just can come up. Watch out. Something may come out of right or left field. You really never know. And what happened to oil, right?
I think before that, the thing is, in the midst of an unwind of the carry trade, we also had in the US poor economic data, adding fuel to the fire. The non-farm payroll report was really weak, and that sort of, snowballed in terms of how people got out of their positions. Bank of Japan bad data out of the US, sell was the motto order of the day. But when you start looking at that data and you start looking at what actually drove the weaker data, you had a lot of temporary layoffs. So in effect, some of these jobs can come back and the next job print can be better. But in that moment, we had obviously risk off. And when you have equity markets that are highly correlated with other risky assets such as oil, oil is no longer looking at its fundamentals. It's reacting with equity markets. So we had a pretty steep correction when it came to oil markets. We saw Brent almost hit $75 per barrel, has now since bounced back a little bit. But at the end of the day, the broader negative macro narrative that has been driving oil markets is still pretty much there, despite any geopolitical risk premium that we may consider when we talk about, say, Iran and Israel and the broader Middle East
Yeah,
as a whole.
one of the things that Will and I have been noticing is all the data that comes out, which is admittedly a little bit more bullish than the consensus had been, immediately gets knocked off in the next revision or in the next monthly report. What
Yeah.
can
So
you share with us?
there's been some pretty heavy revisions to, especially non-farm payrolls. So we've had about 140,000 jobs worth of revisions in the past three releases, and that's all painting a much more bearish picture. All the revisions were down, but then on the EIA side, we've seen them revise up their gasoline demand by about 800,000 barrels a day. For May's figures. So yeah, you really, at the moment at least, it seems you need to be taking the data with a pinch of salt.
More than a pinch of salt, but regardless, when the data for the inventories on gasoline and consumption implied demand got revised, markets came back. But we have also seen a little bit of VTOL kind of adding a little bit of fuel to the fire, right? They have been buying. What happened to the differentials on dated Brent, Harinder?
Yes, so we saw that the dated, I think it was 75 cents 2 days ago, and then it spiked up to $1.75 or 70 cents to $1.75. So a huge move there in the
And that led us, and I recommend you read the officials to put a little bit of information about and our views that we think dated Brent is kind of breaking down, because it's not reacting in the way it was originally conceived to react, how it was designed many years ago. Right now, it's actually a source of volatility. I would recommend very much that you look at dated Brent and compare it with any other underlying futures and mechanisms, because now dated Brent is more volatile than the rest, and that means it's not working really. So what do we have here? We want to make these things a little bit snappy. So where do we see things going in the next round?
I think for me, from the broader, let's say, macro perspective, the concerns around recession that have developed off the jobs report, whether or not the Fed will act swiftly or, like Goldman says, in a string of rate cuts of 25 BP that some may consider not fast enough. All these things are there. The geopolitics are there, as well. Iran has pledged to retaliate against Israel for the killing of a Hamas leader on its soil. But the longer it prevaricates on the shape of its response, the more the market is going to fade that geopolitical premium, as it has in all the previous instances. My personal view is that while we did have this bounce back off of the massive correction, I still think that, in the current environment, concerns over demand, very adequate supply. You've been reporting a lot of this in the officials in terms of there is crude to be delivered into the window. That's going to weigh on Brent. And so I'm still convinced that in terms of strategies and looking at things, a lot of people will be looking at shorting spreads, taking an opportunity of this recent move up in spreads to start selling that, or taking a maybe more conservative view by selling flies on the curve. At the end of the day, we were talking about where's the new floor, right? And we had a little poll about this, and is a new floor 75? Or is it something lower in the 70s? And my personal view is we will eventually retest that 75 and move lower.
Yeah, one of the things we were talking before coming in here is the market is so skittish, so fragile, really, reacts very quickly up or down. Is it because we are facing a potential reset? And is that reset from where we are at 78 going towards the 90 level? or going towards the 65 level? Will?
I think it's going towards the lower end of that. I think maybe low 70s, low to mid 70s is where it feels like it's going for me.
I don't think it's going to go there in a hurry, but it could go there in a hurry, and this is why traders exit positions very quickly. I don't know if you have been noticing that, Harinder, as well.
Yeah, in terms of targets, I think we will retest 75, and Harry and I have been discussing as well. There's like a technical level of support around the $70 to $72 per barrel level. I think if it does break through 75, that's kind of a key area we'll be looking either for support or for further retracement downwards from that point. If it breaks through there, we're likely to see in the 60s.
And it could be fast. Just to piggyback on what you were saying, market or skittish, what are we talking about? We're talking either low volumes, low liquidity, which means that any movement could be amplified. And then that move, as we come to test 75, could quickly degenerate to the low 70s, and vice versa. If we actually had a truly bullish catalyst in the market, maybe the closure of oil infrastructure or production as a result of a geopolitical event, a true bullish catalyst to be able to set us back up there. But in my view, I don't see a true bullish catalyst right now in the making. So thus, like with Will, I think the grind will be lower to 75, and I was talking with Harinder, the next support level that we see from a long-term perspective is in that 70, 71 area.
And any unforeseen events or these black swans are always towards the negative. Like we saw today in Japan, a tsunami. So we could be unlucky and have that water level just coming up and, doing all these things. So anyway, we finish with this and we'll see you next week. Thank you very much for watching us. Please don't forget to click, like, and subscribe to the officials.